Alright, let's get started. I've got a bit of a cold this week, but we're not going to let that stop us. It's not so bad. It's not so bad. I say as I start coughing immediately. It could be worse, of course. You know, some of us still have functioning immune systems, and will do for the foreseeable future. Although things are looking pretty rough in other parts of the world in terms of the tyranny. So I was kind of hoping that I'd make money trading, sufficient at least to hunker down with supplies. If I lose my job or whatever for refusing to be needled about certain issues. It's not worked. I've only lost money, as you well know. I guess that emergency plane ticket to some banana republic isn't going to happen. But actually, the past month has been okay. I've had to take some money out of my trading account to pay bills. I had a gas and electric bill. I had to pay double my rent because I skipped a month. And a bunch of other things, you know, supplements, medication. I bought some clothing. So it's been a pretty tight month, but my successful trading in silver, yes, you heard that right, my successful trading in silver has meant I've managed to move a bit of money over into my regular account, so we'll be alright till the end of the month. So what bodes for the future? Well, we've done our inverted head and shoulders on the daily, and we plunged back into the neckline. I'm long. In my excitement, of course, I've been getting long every day on the way down. I'm getting stopped out, duh. But hopefully soon we might do a sweep into here. Maybe by Thursday we'll be at 2400. And we could come quite low. Ideally we don't revisit down here and we've got a double bottom here. We don't need to do a double. You know, at 23, but $24, and then whatever really, anything under 24. Well, I'm buying. The Trendo gimmick is green. We're buying pullbacks on lower time frames. We're retesting a neckline. You may know buy. We've made new highs. We're retracing. That's a buy. Everything is telling you that we should be buying the pullback. You know, it's not rocket science. As long as you're not over leveraging like an idiot, like some of us do, and get too excited because we think the pullback is only going to be, you know, to here or to here or to here, and we just buy every time and then get wrecked. You can see it's made a flag of sorts. Depending on how you want to draw it. And we're coming in towards the bottom of that flag. We're coming into these extreme lows here. And this top. And again, all of this area in here is sort of that neckline area. Let me get rid of these. And then anything under, again, here we go, 24, that's a key pivot. Anything around 24.40, and then, like I said, anything down to 23, you'd have a reason to buy, I think. Looking for this to be a flag. There's the hourly. So I'm long at the close. You know, we're near the bottom of the flag. We're revisiting this area here. We've got sort of positive divergences coming in. So on the hourly, I thought that was a decent buy setup. Now stocks, I think they look very bad and ugly. I think they have an ugly look to them. Now I've been wrong so far about the Nasdaq. Where's the Nasdaq? Here we go. I thought, well, I called it short here and we got this, and now we've made new highs. And maybe this is going to be some sort of monstrous breakout, you know. Maybe this is... I remember watching a Chris Giavaco video, or the fundamental analysis this morning, and he said, well, here in the 2000s, early 2000s, when the first boomers started to retire, they were sucking all the juice out of stocks for their retirements, and here is where the first millennials start to get their first promotions and start earning real money. And so we're going to see a bias towards stocks again, just like we saw the bias towards stocks when the baby boomers were in their peak earning years. They drew down, and now the next generation is in its peak earning years. We're going to see unlimited, insane upside, and who knows? I mean, we could. Let's thicken that up. That's one hell of a pivot. I'm still not sure, because the world is not the same as when the baby boomers were peaking and there was loads of them and they were entering their peak years. It was a fundamentally different world. They could afford things. Well, there was more of them. There was less old people, and everything in the world was cheaper, and they received more. Labour was compensated relative to its productivity more as a percentage of GDP. Debt was lower. Debt repayment was lower. Everything was just different. You know. The Nasdaq still looks pretty good, but I'm going to show you some internals in a moment. Decent movement looks okay. Falling off a bit, but as it's been falling off, it's putting this monstrous move. So, easy movement works on some things and not on others. It's a weird indicator. But basically, I'll show. I'll talk about this, then we'll look at the breadth charts and the internals and whatnot for why I'm still bearishly biased, and I think maybe we've gone far enough. Well, first of all, this action here, high, low, high, on divergence, close underneath previous highs, acting as pivot now, 47.18, yeah? 47.18, And I'm not a numerology geek, but 47.18, guys. Price volume trend has been very unenthusiastic. We're still below the pre-COVID crash, which means either there's tons of extra juice, but then again, is there? We've seen unprecedented inflows. We've seen the biggest inflows ever into stocks. And it doesn't look like it's made a lick of difference. I'm going to have some tea without milk in. Some nice black tea without milk. And I'm going to have some vape. Let's see if this helps my cough. Which one shall I have first? Let's have some vape. And maybe the CBD will be soothing on my lungs. I don't know if it's good for immune function. My vape juice is getting a sort of brown scummy layer on top. Oh, that's better. Yeah, so anything under here, basically, I'm selling. I'm short the S&P, along with my long silver position. And let's review why a little bit. Okay. I've not quite finished formatting these up. Let's put you below. Let's put you above. Landscape. Yeah. No, not price volume oscillator. It's a fucking price. I want price. There we go. So this is the bullish percent index of the S&P. And it's been declining for more than would have done you good. If you'd been paying attention to this and trading off the basis of lower highs, you'd have just got wrecked. I mean, look at this. All these have kind of served as reverse divergences so far. But that cycle completed here in October. This cycle of sort of diverging without having any effect, thus acting as sort of a reversal, a positive reversal, ended here with this low. And it had the chance to go higher, scoop out all these highs that were just part of the positive reversal, and it hasn't. Instead, look what it's done. It's dumped out here. It's weakened and dumped out here. In Myad, we can see price just scooped out, just scraped these new highs, absolutely unconfirmed, and then voomph. Nide is often quite a good indicator. Let's get rid of these other ones. Make more room. Whoops. Make more room for the chart. See the divergence here in Myad, got you this low. Low in price, higher low in Nyad, got you this run up here, and then we see higher high in price, lower high in Nyad. So it's pretty good basically. So bullish percent index doesn't look good, Nyad doesn't look good. Here's your percent of stocks over the 50. Also not looking good. It's in the higher regions, but it's done a big rollover. And this is even uglier. Nyud. Let's get rid of these again. There we go. This is looking abysmal. Absolutely abysmal. The high was back in June, and the S&P was at 42.61. I mean, my goodness, look at this. And again, you could say, well, okay, this is a, that's a positive reversal. Lower low on the indicator, high low in price, big buying opportunity. Again, you get the positive divergence with these low, like with Nyad. But then, oh, it struggles, and it tanks. Here's the record highs in the New York Stock Exchange. Again, divergence and collapse. So either this is the best buying opportunity of all time because this is making new lows, this is making horrendous lows, this is making big lows, while price is hardly moving, in which case you ought to get long like a greedy pig, or it looks shit and it looks bad because it is bad. I'm saying I'm taking the position, I'm taking positions on the basis that it looks bad because it is bad. Yeah, I'm just trying to see what's in front of me. That's what I'm seeing. I'm trying not to put any narrative on top of that. When I look at that, what do my eyes say? It looks bad. Without any kind of preconceptions that I'm aware of. silver looks meh for being long. This is silver against bonds. I guess commodities against bonds. It spent the last week falling, as you'd expect. Maybe it's making like a rounded out. Maybe there's cups and saucers inside cups and saucers, but it doesn't look great. Against the dollar, again the dollar made new highs. Against stocks. Again, I was saying it looked like it was, this was sort of head, left shoulder, right shoulder type of thing going on, but we're not breaking these levels. We're not breaking these levels up yet. We're not really breaking up. Well, we did briefly, but then we pulled back. So, but I think long silver remains a fair position to be in. And short stocks. Well, short the S&P anyway. Maybe the Nasdaq will do its own thing. So I'm shorting here basically. In this price action here, I'm short. But on the 15, I don't know. That's a bit of a divergence there, a bit of a bullish divergence. Triangle breakout, wedge breakout. Who knows? But anyway, I'm staying under 47.18. I'd be short. The Nasdaq's doing its own thing, clearly. Well, maybe. Let's look at the 2 hours. Just buy pullbacks. That's what it looks like. Yeah, the dollar. So let's talk about the dollar. What a week the dollar had. Coming up into more. Will it show if I go on the daily? Yeah. Coming into sort of more key resistance zones. So hope this will bode well for silver. Is it going to roll over? We could go up to 98. Lord help us. On the daily, on the 4 hourly, that's a tremendous positive reversal. But the question is all about, is it going to roll over in this kind of area now? If it is, that'd be a good place for it to do it. It doesn't have to, it might not. But if it is, this is as good an area as any, is my take. Look, here's Bitcoin. You can see we're banging up against the underside of all this here. My take on it was anything under this level was a sell, and then anything under this level, you know. So if I was in Bitcoin, I'd be short. So because the dollar had such a good week, it's the pound's a bit thrust up, but then thrust back down. You know, that's not a good look. Pounding up into this low here, into these lows, coming back down, because you're relying on buying, picking up here now, otherwise we're going to make new lows. So if we go like inside this candle, I guess I'd have a buy stop above here. The FTSE spent all week pulling back. And it's revisited again, it's retesting this area. If that doesn't hold, it's not good news. Gold. We'll start on the weekly. That's the area that needs to hold now, basically. So 1840 is the low of the week. You know, it would be good if that held. Otherwise, it'll be these highs in like the 1830s on the weekly. This area here, basically. I would also fill this void. There we are on the daily. had a great run since late September. Are we going to keep giving back, or are we going to keep going? Very clever people on Twitter keep telling me it's the great commodities bull market. Well, how do we know we've not missed it? How do we know this? Was this not it? You know? I don't know. Dollar yen. The daily. Doesn't look good. I would have sell orders above this wick, and I'd be looking just to sell on lower time frames, as is, I think. Yeah, I would just sell. I would just sell that. I know we got the divergence here, but it looks like we might come up. If we come above these highs, we might roll around here. Yeah, I don't know, something like that. Uranium. Uranium's been rocking and rolling. It's pulling back now. $2,500 would be nice. If we could come back to 530. Under this low, basically. Anywhere under this low would be fantastic. What a monstrous run there. What a beast. So that's the only issue. The amount, the huge gains you'd make on the way up, because look at the scale. Look how each interval of 200 points shrinks into nothing as you go into the stratosphere. You could lose the same on the way down. Bonds. So there was the building divergence. We got the pop. We took out this high and we dumped right back out and retested. This demand area here, I suppose. Let's get rid of that. As for bonds, I don't know. It doesn't look good, does it? Underneath here, anyway. No, I don't think it looks good under there. And look at that key pivot line. That's what it is, that's where it's from. High yield. Oh boy, one ugly thing. I'm going to get rid of that, it's not even worth looking at. It's just too ugly. Semiconductors. Absolutely rocking and rolling. 1, 2, 3, 4, 5, and plummet. Who knows? The Nasdaq and semis look alright, but vulnerable. There's no middle ground here. Either extremely strong, I think, or extremely vulnerable. Real estate. It's gone nowhere for months. Nothing really to say about that. So yeah, we're long silver. We're short the S&P. Let's see what happens. Patience is key. It's not days, but weeks. But when the weeks go by so slow, it's hard to be patient and do the right thing.